Hello everyone, Mariko Berg, residential realtor with the Bridgewell Real Estate Group, and welcome to the Bridgewell Group YouTube channel where I talk about all things real estate, specifically in my market, which is the Greater Vancouver and Fraser Valley areas. And in today's video, I'm going to be talking about what happens if an appraisal comes in low. So I'm going to be going through the basics of what is an appraisal, what is the appraisal for. I'm going to go through two different calculations to actually show you what it means if the appraisal comes in low and how to calculate that difference in down payment that you'll need to bring up in that situation. I'm also going to go through the difference between appraised value and market value. Just a quick disclaimer, as mentioned, I am a residential realtor. I am not an appraiser. I am not a mortgage broker. I've definitely verified these calculations and examples with a mortgage broker, but if you are looking for specific advice or specific examples where you've had an appraisal come in low, definitely make sure you reach out to your trusted professional so that they can help you through that process and help you determine what to do. Without further ado, let's get into it. So starting off with what is an appraisal? An appraisal is something that is hired by the bank or the lender where a third party, typically appraiser, comes in to help justify the amount that you are spending on this property. So it might not necessarily be like exactly market value, but you can kind of see it as the bank coming in and investing in this property with you. And so they want to make sure that their investment is a good investment. They want to make sure that you're not crazy overpaying for this property. And so that's why they hire the appraiser to help come in and say, okay, yeah, like I'm taking a look at the property. Sometimes they do a desk appraisal, which is online. Sometimes they do an in-person appraisal where they quickly come through. They confirm the facts of everything that is advertised, and then they do their own market analysis based on solds and active properties to come up with a number that they can justify. Very commonly, it is the purchase price, but in some markets, maybe where they're being a little bit more conservative or where the market has gone down since you had agreed to purchase the property, say like in a pre-sale situation where the appraisal happens much later, or maybe even in a situation where you honestly have just straight up overpaid. Those are kind of examples where the appraisal could come in low. So when does an appraisal typically happen? This is going to depend based on when you or your mortgage broker orders the appraisal, but really it's typically based on the nature of the property that you are purchasing. So is it a resale property or is it a pre-sale property? In a resale situation, most of the time you're going to have a subject to financing, and the appraisal is going to be a part of that financing condition. Again, you want to make sure that the bank is able to justify the amount that you are purchasing the property for, and so you want to make sure that you have a big check mark on that typically before you remove that subject to financing. So it's very common in a resale situation for the appraisal to happen during the subject removal period. Now in a pre-sale situation, it's very different. You have to think about where you're at in that timeline of the pre-sale, but also if your mortgage broker is able to do a blanket appraisal, or if they can only confirm your financing roughly about 120 days out from the completion. If your broker is able to do a blanket appraisal, then often that happens during that rescission period where you might actually be sorting out your financing then. But more commonly, I would say, people are kind of tying up all loose ends on their financing much closer to that completion date. And so you can see how this would be risky, particularly if there's a long period of time between when you got that accepted offer on the contract and when it actually completes. It's not uncommon to see 1, 2, 3, 5-year build times. And obviously there's a lot of change that can happen in the market from when you purchase it and when you actually complete on that property, and in turn have that appraisal. So long story short, when you're dealing with a pre-sale, this conversation is even more relevant because there's a lot of change that can happen, and the appraisal happens at a much later date in most situations compared to when you've actually purchased the property and agreed to a purchase price. So how do you mitigate this risk of an appraisal coming in low? First, you really have to understand what actually happens. So when an appraisal comes in low, the reason why this is important is because the banks only lend based on appraised value. So if you've agreed to purchase it at a higher price than what the appraisal comes in at, then we have to work on a calculation to figure out what that difference in additional down payment that you're going to need to put forward is. So I've brought two examples forward to you guys. Let's just get into that. So let's go through an example of your appraisal coming in low. And the first example I want to use is a $1.6 million purchase price, which correlates to a minimum 20% down payment in the Vancouver area. So to calculate the down payment that you would have to give at a minimum based on that 1.6 million, just do 1.6 million times 20%, that's $320,000 that you would at a minimum be expected to bring in. So what happens if your appraisal comes in low? In this example, I'm working off a 1.45 million appraised value. So the appraiser comes in and says, look, I know you agreed to purchase it for 1.6 million, but I actually feel like the amount that I can justify is 1.45 million, which means there's a difference of 150K. So what happens in this situation is the banks will only lend based on the appraised value, right? So you have to make up that difference. So how do we calculate that difference in down payment that you're going to need to put forward if you decide to move forward? Or for example, if it's like a pre-sale and the appraisal is not happening till later, you've already committed to it, what does that actually mean to you? So the way that we calculate that is we have to figure out that maximum mortgage amount, right, that the bank will lend to you based on this appraised value. So if we're working off of an 80% mortgage to 20% down payment, minimum 20%, like I said before, what we need to do is we need to take 1.45 million, the appraised value, and we need to figure out the maximum mortgage that you can get, which is going to be 80% loan to value ratio. So we take 1.45 million, times it by the 80%, and that comes up with a max mortgage amount of $1.16 million. So the way that we calculate this is quite simple. We take the amount that you've agreed to purchase it for, which is the $1.6 million number, and now that we know that the maximum mortgage amount that you can qualify for is 1.16 million, we subtract that number from the amount that you've agreed to purchase it for. And then that's where we come up with the amount that you are going to need at a minimum down payment if you move forward based on that lower appraised value from the purchase price that you already agreed to. So that number is $440,000. So a lot of people have the misconception that if an appraisal comes in low, you just owe the difference between 1.6 million and 1.45 million, which would be $150,000 that you would have to put extra. But that is not actually how this works because it's all based on percentages. So you can see here that the revised down payment that's at a minimum is $440,000. So if you're looking for the difference, you subtract it from the down payment, the 20% of the 1.6 million, that's actually only $120,000 difference. So you're not having to put forward that extra 150. Obviously, you're still having to put a significant amount more money down, but it's all based on calculation. So in this situation, it comes up to about 120K extra. So let's take a different situation where you had planned to put a very sizable amount down. So let's change these numbers to 40% down is what you had planned, which would basically double this number to 640K. So in this situation, all of the numbers are exactly the same in terms of the appraisal comes in low, how we calculate the max mortgage amount, all of that stuff, right? We still take the revised down payment being $440,000 based on this $1.45 million number. The difference is you can really see here how having a higher down payment plan essentially safeguards you from an appraisal coming in low, because in this situation, the minimum revised down payment that you need based on the purchase price and the appraised value is $440,000. But if you were already planning to put 40% down, you already have a down payment of $640,000 based on that $1.6 million. So this appraisal coming in low doesn't really affect you in terms of being able to get that mortgage strictly based on the appraised value. and definitely protects you. So this is particularly important for situations, say like a pre-sale, where it's like you've agreed to something way earlier and many people are getting an appraisal much closer to the completion date. You have to understand that risk involved and how to mitigate that risk. And one of the ways to mitigate a low appraisal is having a higher down payment ratio to help safeguard you from this situation. So now that we've gone through that calculation and you understand increasing your down payment as an option if the appraisal comes in low, I also think it's good to consider some other alternatives. So at the end of the day, the appraised value is dependent on that appraiser and that bank. Maybe that bank is being particularly conservative given the market conditions. Maybe that appraiser has their own subjective value to the property based on those sold and active comparables. It's actually quite similar to a market evaluation that a realtor does when, say, they're first listing your home or they're helping to determine what the amount is appropriate to purchase that property. We pull sold comparables, we pull active comparables, and then we come up with a range that we think is justifiable, right? But there's always a subjective portion to real estate that you need to consider. Maybe that second parking stall is really important to you because you have 2 cars, but to me, it's not really worth anything. Or EV parking. Maybe that's not worth anything to me, but it's worth something to you. Or view is very, subjective in terms of what the value of that view is. So you definitely have to consider that. And in turn, you might also want to think like, okay, I don't agree with this appraiser's number. Maybe I want to consider a different appraiser. That might look like going to another bank and getting qualified at another bank and then ordering a new appraisal. There are definitely situations where our clients have maybe not agreed with an appraiser and then they go and they get a second or a third appraisal by going to other banks and they come back at full value. So it's not to say that this answer is the only answer. And if you don't necessarily have a viable option to significantly increase your down payment, that could be another avenue that you want to explore. Just keep in mind that those appraisers may also have a similar value to that original appraiser, so there's no guarantee that that amount will increase. Thank you so much for watching, and I hope that this video was helpful. Again, my name is Marie Goldberg, and I am a residential realtor in the Greater Vancouver and Fraser Valley areas with my team, the Bridgeville Real Estate Group. If you are looking to buy or sell in those areas, definitely feel free to reach out to us. We would absolutely love to help you. And again, I'm not a mortgage broker, I'm not an appraiser, but I hope that, again, this video was helpful. If you are looking for specific information based on your specific scenario, definitely make sure you reach out to your professional that actually understands your property, the transaction, the situation that's going on, and make sure that you get the help that you need that's relevant to you. Thanks so much again, and have a great day.